So yes, it is best to get pre-approved before putting in an offer. If you're a realtor, I wouldn't accept anything from a buyer unless they're pre-approved, because you don't know what they're worth and it could be a complete waste of time. So what is the process? For me, or for my company, this is how we do it. We get a mortgage application from the borrower, then we do a credit check. That's the first two steps. So the mortgage application gives us job history, rental history, income, etc. Shows us their assets. I then pull credit. So all of that could be excellent. Pull credit. This is the big point. You know, people can come in with an 800 credit score or a 500 credit score. We don't know, and a lot of people don't actually realize where their scores are, or they get their scores from one place which is not the same as a mortgage credit score. So depending on where their credit score is, that tells us what kind of loan type they move into. So once we're there, then I ask for some paperwork, depending if they're W-2 or self-employed. There's a kind of a small difference in what I need, but basically it's W-2s, tax returns, bank statements, picture ID, and a couple of other items. So I'll take those and take a look at their income, compare it to their mortgage application, make sure that's the same or as close as possible. Some people are, tend to put a little bit higher or a little bit lower. But once I check their W-2s and pay stubs, I know exactly where they stand. Then I do what's called desktop underwriting. I have all this info, including their credit scores. I run it through my system, and that desktop underwriting will tell me if they qualify for a particular loan. So if their debt to income is 50% or under, there's a chance that they can go conventional, depending on credit scores and income, etc. Between 50 and 57, they can go FHA. Obviously there's USDA and VA. VA really doesn't have a max debt to income or a low in credit score. That's down to whichever lender we decide. And there's other rules for USDA and non-QM type loans. At that point, if everything checks out, then I write up a pre-approval letter, we give it to the realtor, you can go put in an offer. And that's it done right there. Everything's checked, we're all good to go. If I just take your word for it on how much you make and your credit score, you get under contract and then I run everything and it's not what you say, that's just a waste of time and money for everyone. So that's it. We'll try and make it simple as possible, as quickly as possible. And then when you're ready to buy a house, you're good to go, especially as the year gets further into the summer and the fall. That's when it really gets busy and you need that pre-approval up front. We're done. That also speeds up the process to get the loan, because if I've got everything, I send it up to my underwriter, they just click some boxes or check some boxes and we're good to go. We get a fast underwriting. That's pretty much it. It's simple.